Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech, and blockchain ecosystem. All because I watch the Inside Blockchain show on Cryptotvplus. Every Monday morning, Cryptotvplus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Cryptotvplus.
Over the recent years, regulation has been one of the biggest topics in the crypto space. From who should regulate the space to how it should be regulated. The players in the space are of the opinion that regulation may impact negatively on the decentralized and transparent nature of the blockchain space. What do you think? Hello and welcome to the program. This is Inside Blockchain Live on Cryptotvplus. My name is Faith Ekwari. It's another Monday morning. If this is your first time on the show, do it to follow us across all social media platforms and subscribe to our YouTube channel at Cryptotvplus. Click on the bell icon to stay updated whenever I release a new video. Today we'll be discussing the legal and regulatory framework to trade in crypto and building innovations in Nigeria and in Africa. Let's go on a quick break. When we come back, I'll be introducing my guest and we'll be getting into the conversation. Don't go anywhere, we're right back.
Hello guys, welcome into the metaverse on Cryptotvplus. In today's video, we're going to be taking a portal into the Wolves of Rome metaverse. Here's a hint. Put your poker face on and follow me. Wolves of Rome is a traditional trading card game all about legendary commanders, big players, and tons of competitive battles. It is magical. The Gathering-inspired universe with a twist of ancient history where anyone can earn tokens through...
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency, only on Cryptotvplus.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Cryptotvplus.
Don't touch that. Peace.
Welcome back everyone tuning in from around the world. This is Inside Blockchain. I am Faith Ekwari. If this is your first time of tuning in, make sure to follow us across all social media platforms and turn on the notification button, hit the subscribe button and to join in our YouTube. Now, today we're going to be talking about the legal and regulatory framework to trading cryptocurrencies and building innovations on the blockchain space. So join in on the conversation today is Davidson Oturu, who is a tech expert, who is also a lawyer and a blockchain enthusiast. How are you doing, Davidson?
I'm fine, Faith. Thank you, and happy to be here.
Amazing. Now let's get into the conversation. To kickstart it, the conversation, congratulations on drafting the startup bill. Congratulations.
Thank you.
And reading through the bill, we could see an effort from the government in trying to build a more flexible and conducive environment for the tech industry to thrive. However, there was no direct point out to the aspect of cryptocurrency and blockchain technology. Why is that?
All right. Well, thank you so much. I mean, that's a very important question, right? So to understand why maybe I'll use the word controversial topic like cryptocurrency is not contained in the Nigeria Startup Act is because of the way the present regulatory environment is. The level of uncertainty that exists at the moment. Now, if you look at the regulators in this space, namely the Central Bank of Nigeria and the Securities and Exchange Commission, and to an extent now the Ministry of Finance, which we'll get to later on, you've seen them take different positions, right? So introducing cryptocurrency into the Nigeria Startup Act as a direct point would have stirred quite a number of feathers. Now, let's look at the central bank's position. It's well documented, but in 2017 and 2018, the central bank had warned that trading in cryptocurrency was a risky venture, and anybody who was doing it was basically carrying it out on their own risk. That was the state of CBN's position. But in 2018, 21 February to be precise, what the CBN then did was they outrightly prohibited banks and other financial institutions from carrying out transactions with cryptocurrency exchanges and businesses, basically taking them off the banking network in Nigeria. So that meant that if you were trading in crypto in any way or form, or you had a crypto wallet, or you were involved in anything that remotely resembled cryptocurrency trading or involvement at all, you could no longer hold a bank account or use all the other fintech platforms that could exist and would have enabled you to carry out crypto-related transactions. Let's look at the SEC. On the other hand, they came out with a statement in September 2020 saying that yes, they would to a degree regulate cryptocurrency. And in just this year, May, June this year, they actually came out with their rules, on issuance, offerings, and custody of digital assets, which again seem to imply that they would cover cryptocurrency regulations. But surprisingly, just last month, the Director General of SEC came out and said no, they would not be regulating cryptocurrency. In fact, that they would only be regulating sensible digital assets, which doesn't really make much sense. But then, if you look at the Finance Bill of 2022, which the Ministry of Finance, recently published, it indicated that there would be that cryptocurrencies were going to be taxed. Digital assets, virtual assets were going to be taxed. Now, if you're familiar with the finance bill, each year the federal government releases a finance act that amends certain provisions of existing tax laws. So what it now seems to appear is that even though there is no regulation or law that directly deals with cryptocurrency, you now have the finance bill basically indicating that come 2023, cryptocurrency transactions will be taxed. So with this level of uncertainty and lack of clarity around the space, to have the Startup Act directly indicating that cryptocurrency, would enjoy some level of, I don't know, there would be some incentives applicable to cryptocurrency businesses would have been too much of a stretch. What we are left with is a situation where there is sufficient, room for cryptocurrency operators, blockchain operators, and other folks in that sphere to enjoy the incentives that are provided for in the Nigeria Startup Act and not just related directly to cryptocurrency.
Amazing. Now, despite the uncertainty around crypto trading in Nigeria, there are major crypto activities going on. Innovations are taking center stages, from NFTs to metaverse to GameFi, and also a good number of crypto projects are skyrocketing by the day. What does the law and regulatory framework look like for the crypto market and the blockchain ecosystem in Nigeria and also in Africa?
All right, thank you, Faith. So there is still a lot of work to be done when it comes to having clear regulatory framework, not just in Nigeria, but across Africa as well. I referenced the finance bill, which will become a law next year, and which indicates that cryptocurrencies will be treated as digital properties subject to taxation. So there may be some movements along that way. I also mentioned the SEC rules, which may treat digital, assets as, which may treat cryptocurrency as forms of digital assets as well. Now, if the Central Bank of Nigeria lifts its ban, as a result of the taxation principle being introduced into the Finance Act, then we may see some movements, that could lead to a level of certainty. But again, it depends on what we finally see in the Finance Act, CBN's position, as well as SEC's position. So next year is going to be actually quite interesting in Nigeria, seeing how all these different regulators and laws are able to work out a clear framework for cryptocurrency. Now, if you look at other African countries, I would say that there has generally been an unfriendly approach towards crypto and the blockchain ecosystem. You look at countries like Cameroon, Ethiopia, Lesotho, Sierra Leone, Tanzania, the Republic of Congo, they've all banned cryptocurrency outrightly. Look at a country like Kenya, which we consider as being, in advancement when it comes to fintech and other tech-enabled businesses. But in 2015, they had cautioned banks, from dealing with cryptocurrencies and crypto companies. And in 2021, last year, they decided to recognize them as a form of property subject to capital gains tax. But even that in itself has not been fully structured out yet. So we're waiting to see what happens in a place like Kenya. Zimbabwe took a similar stance like Nigeria, where they told banks to stop processing crypto transactions. In a country like Liberia, they went as far as even demanding that people trading in cryptocurrency should cease operations. In Tanzania, the government allowed people to trade in crypto, but has made it clear that they do so at their own risk. So this sort of hands-off approach, while it may seem attractive to crypto operators, but it creates that risk of exploitation by unscrupulous persons as there is no avenue for redress. Because if a government body is telling you that you are trading at your own risk, that means that if you lose out at any point, the government is probably not going to intervene on your behalf. And so those are some of the challenges we see in Africa. I would say South Africa is one of the countries that seems to probably have some forward thinking aspects to their regulatory position. And in 2019, they actually issued a white paper recommending elaborate regulations to cover crypto transactions. And so regulators in South Africa have started showing that they understand crypto adoption, which may increase over time. Now, in October this year, there was a notice from the Financial Sector Conduct Authority in South Africa, which actually described crypto assets as digital representation of value that should be subject to regulation. They've also indicated in South Africa that they plan to license crypto trading companies from 1st of June 2023 to November 2023. But what they've also made clear is that without a license, crypto companies will not be able to operate in South Africa. They've also gone further to clarify that NFTs are covered by the new position as they sort of behave like traditional art investments, and so the NFT market will be monitored. So this is what you see across Africa, that other than South Africa, and maybe a few others within the space, a lot of African countries are still very suspicious of crypto. And we are hopeful that next year Nigeria would, look at best practices and see how they can adopt such to the ecosystem.
Amazing, amazing. Now, regulation will make the crypto industry safer and more secure, and also help drive massive inflow of capital that will help stabilize the market. But why are most of the exchanges pushing against regulation, especially regulation from the government bodies?
So you need to look at the market in itself, to fully appreciate that point. And I would say the reason for this pushback varies from exchange to exchange and market to market. In some climes, you will see it an initial attempt by the regulators to take that position of sanctioning, prosecution, fining people for selling crypto tokens without registration or meeting disclosure requirements. So when you consider that, against that sort of backdrop, some exchanges will definitely not be excited about the prospect of formal regulation. For this sort of exchanges, where the regulators are trying to apply traditional securities legislation that you see in the capital market, they need to be able to understand the unique differences of the crypto space. And if they fail to do so, then there will be that conflict. But on the other hand, crypto exchanges have long operated with little or no oversight or accountability, which allows them to generate profit and not prioritize consumer protection. So we consider that regulatory oversight will curb these sort of unrestricted profits, introduce consumer protection, and transaction limitations for risk mitigation, like you would see in the proposed SEC rules in Nigeria. Even though the rules have been issued by SEC, they've not been operationalized yet, which means that you actually cannot get a license yet from SEC until they indicate that those rules are now live and active. So we consider that regulation would ultimately lead to some level of clarity, but you will definitely see that pushback because of the level of distrust on both sides, from the government as well as from the operators in the market.
Amazing. Great stuff. Great stuff. We're still talking about the legal and regulatory framework in trading cryptocurrencies and also building innovations on the blockchain. Let's go on a quick break. When we come back, we'll continue the conversation and look into the foreign legal foresight and external regulatory monetary system in Nigeria. We'll be right back. Hello and welcome to Exploring NFT Projects. Today, let's check out Art Gobblers. Art Gobblers are fully animated ERC 721 NFTs designed by Justin Rowland and Paradigm. They have random attributes and produce gradual ownership optimization, popularly known as GOO or GOO, which is an ERC20 Ethereum token emitted by Art Gobblers, which serves as the foundation of the Art Gobblers economy. Art Gobblers can gobble art.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Cryptotvplus.
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Hello and welcome back. This is Inside Blockchain live on Crypto TV Plus. I am Faith Equire. We're still talking about the legal and regulatory framework to trading cryptocurrencies and building innovations on the blockchain technology, especially in Africa and in Nigeria. Now, Davidson, talking about pushbacks, can the crypto industry function without a foreign legal foresight and the external regulatory monetary system?
All right. Thank you for that question, Faith. Very pertinent question. I would say the question should not be whether the industry can function without legal oversight and monitoring, but whether it should function without it. If you look at the market, the current default is in most jurisdictions, the crypto industry is generally without oversight and monitoring. We've seen what that can lead to with the FTX scandal that is still rocking the entire globe. Not only have numerous customers lost their funds, which were held in custody with FTX, but several other businesses, crypto and non-crypto, have had to either trim down their operations or shut down as a result of losing their operating capital with FTX. You see, where there is no deposit insurance mechanism for customers of crypto exchanges, like what we have in your traditional banking system, then you would have this sort of run of the banks and losses that will happen. So if crypto is going to make a bounce back next year from the effect of the FTX collapse, then the industry rhetoric against regulation will have to change. And so let's take a traditional capital market operator or fintech operator or bank, that experiences this sort of situation that FTX went through. You know that before they would typically be able to put that much money in FTX, there will be certain regulatory parameters that FTX would have to pass through in order to receive the investment. Companies that have banking licenses, for instance, the central banks or reserve banks of different countries would set limits. They would ensure that they have insurance so that if there are losses, those who invest in those companies wouldn't experience so much losses. So if you come to Nigeria, you have the Nigeria Deposit Insurance Commission, which ensures that every bank, before you can receive deposits from customers, you have to be registered with the NDIC and take up insurance so that if that bank has challenges and has to be wound up, those who have deposited money with them don't lose out. You see the same thing too with the SEC, which ensures that operators have fidelity bonds with them, which are updated each year, again, to serve as a buffer for investors who may lose their money with that SEC operator. But you don't see this with crypto operators. There are no fallback, there are no safety nets, and those things will need to change in the wake of scandals such as the FTX scandal. And so that pushback is something that needs to be looked at closely, right? And like I started with, the question is not whether it can function, but whether it should function without those legal oversight and monitoring.
It's such a very direct and, very explanatory response to that question. Now, there's the notion that regulation and a more friendly legal framework will reduce the impact of volatility negatively on the market. How true is that? What's your take on that?
Well, I would say that it's unclear whether friendly regulations, as they are per se, will curb volatility in the market because, I mean, you all operate in the space, right? So most crypto assets, um, maybe other than stable coins, are inherently volatile, So the friendly regulation in itself may not affect the volatility if the other forces that make the market volatile still remain. What friendly regulations can do, though, is to bring some order and you may say the level of sanity into the market, So let people know who they can report to when things go wrong. Do you have self-regulatory organizations or do you have a regulator for that sector? People need to be able to know where there is a breach, where there's a loss, we can run to this, place, and that's what the friendly regulation can do. Basically put check and balances. I'll give an example again. If I make an investment with a stockbroking firm and returns are not made as and when due, I know that I can report to SEC, as long as that firm in question is licensed with SEC. If I put my money in a bank and I'm having challenges with the bank, I've experienced losses, I've complained and nothing is happening, I can report to the Central Bank of Nigeria, which may then intervene, freeze the license of that company, or fintech and ensure that they comply. Another example we can look at is, the comparison between IPOs, which companies do, and ICOs, which the initial coin offerings. So usually IPOs are done when a company is going public for the first time. For you to go public for the first time, you must have been operating in the market. You've gone past ideation stage, so everybody knows you to an extent. You have real products and services that the public can use. And of course, IPOs are regulated by SEC. In most countries, their SECs regulate IPOs. So someone can just come out one day and say, "Oh, I have an IPO." Months before that, you would have a prospectus. You would have applied for approval. You would have done a roadshow. That those kind of things are clear. Even in Nigeria, before you can go public, you would have to be registered as a PLC for a minimum of 3 years. Have a track record, have a pre-tax profit of not less than 300 million naira cumulatively for the last 3 fiscal years, and a minimum of 100 million naira in 2 of those years. Financial statements. You would have complied with all the SEC provisions. These are just what you would typically see with an IPO. Contrast that with an ICO, right? They have similar objectives as an IPO. You're trying to raise from the public, but if you look at it, there are hardly any accountability measures. Yes, you may have the platform within which the ICO is being raised, trying to put in, some level of checks and all of that. But the question you would ask is that really sufficient? So going back to the main question, the issue is not one of using regulations to curb volatility. It is the fact that there is too much room for abuse and consumer exploitation due to the absence of regulation. So a friendly legal framework is not the type that would reduce, compliance, and then shift the risk to the consumer, but it should be one that will introduce limits and obligations on the stakeholders, in the national and global crypto ecosystem. And so can restore a level of consumer confidence, that there are laws that have to be complied with. So friendly enough for the operators to register and get a license, but not friendly enough such that operators can do whatever they want. No, they have to be hard enough to ensure that there's sufficient trust in the system.
Yes, they have to be sure enough to be sure that there's sufficient safety and security in the system to actually build a more friendly ecosystem. Now, we also touched on security and we're moving to that. Security is one of the biggest problems in the crypto industry. What can a more friendly and engaged regulatory framework do to create a safer environment for crypto trading and blockchain activities to thrive? Let's punch more on the blockchain activities.
Okay, well, so I'll say the first thing a friendly and engaged crypto regulatory framework should do to ensure safety is to introduce a licensing regime for service providers. As I had mentioned earlier on, SEC had started making steps in that direction by classifying crypto operators into digital assets offering platforms, digital asset custodians, virtual asset providers, and exchanges. Hopefully, when the government starts to look at tax cryptocurrencies from next year, there may also be some further bites that will be given to the SEC rules as well. I would say that when it comes to security, there should be the balance between extending existing requirements in the traditional financial system to crypto and also innovating new rules that are unique to the complexities of the crypto ecosystem. So I had mentioned the issue of deposit insurance, um, and I would say that is something that really needs to be considered very strongly, so that when there's any loss, right, investors can recover in part of their crypto investments. Again, referencing what happened with the FTX, where people have basically lost out. Safeguards would also be introduced to ensure that customer funds are not redirected or appropriated for another purpose. Again, FTX was doing that with Alameda Research. If you look at the SEC rules, there are provisions to safeguard against that. So it provides that retail investors cannot invest more than, I think it's 200,000 naira in a digital asset offering per issuer, and not more than 2 million naira in a 2 month period. Then institutional and high net worth individuals, they have no cap. But provisions like this, are designed to protect smaller investors who will typically have less disposable income, low risk appetite, and are more likely to be harmed by market volatility. So if this is a wise limit, then it may probably work as well. So in terms of security, you really can't have too much of that in the system. And I would say that when you're dealing with security, there is a security of the asset. There's also the security of the platforms that are used, right, as well. And I think the regulations, like you would see with the SEC rules, tries to provide that balance of cybersecurity as well as security of assets, because it also makes provision for ISO, classification for the platforms that you intend to use. So there should be reports from cybersecurity experts to certify that your platform, meets, standard and cannot be easily hacked or compromised. There are provisions for security of assets as well. And like I said, the friendly regulations can also look closely into ensuring that there is that comfort that comes from putting your money in these platforms. You would see with most of these capital market operators and those who go to the market, they will typically have underwriters, who can underwrite the losses that may come from whatever raise that they're carrying out. They would also have rating agencies like Augusto, carry out some kind of rating on their portfolio, so that there's comfort from the market that if you take up those investments, you wouldn't lose out in the end. So I think those are some of the regulations that will be put in place, really, that would ensure that there's a level of comfort in the market.
Amazing. To move forward, let's get some answers to this question. Around December 2020, Financial Crimes Enforcement Network (FinCEN) proposed a new cryptocurrency regulation to impose customer data collection on crypto exchanges and wallets. Don't you think that this is a way of altering or destabilizing the decentralization mechanics of the crypto ecosystem, and how legal is that?
Okay, well, so I would say that, most times behind every regulation, right, there is a problem that probably exists, and, the regulation is trying to solve. Now, if you look at the FinCEN regulation that you referenced, the idea behind it was to require exchanges to submit suspicious activity reports for transactions that are over $10,000 and require wallet owners to identify themselves when sending more than $3,000 in a single transaction. So you would say that rules like this, you would actually expect them in your traditional financial system. You would expect this sort of checks in place. While it may vary from country to country, but usually there's an upper limit beyond which a customer cannot transact without providing additional documentation to prove identity, and the sources of the funds. So I would say that there's legal precedent for rules like this. Again, looking at your banks and traditional financial institutions, they are typically required to report transactions that exist, certain limits as part of measures for curbing money laundering and terrorist financing. I know that one of the arguments that opponents of cryptocurrency use against it is that it can be used for money laundering and financial crimes because of the perceived anonymity of the transaction. So that will say that rules like what FinCEN is proposing, can help to take the wind out of those sort of arguments by requiring disclosure. The decentralized matter of the blockchain will not be affected. I don't think it will be affected, but anonymity, in a certain extent, will have to be sacrificed in order to give the crypto ecosystem the respectability it needs. While the whole issue around anonymity can be an attractive side of it, right? Sometimes there needs to be that trade-off. Do you want there to be a level of clarity and trust in the system from the general populace as opposed to just crypto enthusiasts, and compare that with the need to preserve the whole anonymity around certain types of transactions. So I don't think the decentralized nature of blockchain will be affected, but I think those sort of checks have to be in place as you would typically see in your traditional financial banking and security system.
Thank you so much. We've had such an amazing time having you or talk to us virtually, about this entirety of the legal and regulatory framework, especially when it comes to trading cryptocurrencies and building, projects on the blockchain. Thank you for staying tuned. We are wrapping up today's episode. Before we get into the future of the blockchain space, let's go on a quick break. When we come back, we'll continue the conversation and wrap it up. We'll be right back. Hello and welcome to Exploring NFT Project. Today, let's check out Friendship Bracelets. Friendship Bracelets by Alexis Andrew was first minted on October 26, 2022. Now, with its current sales price at 0.29 Ether, the Friendship Bracelet was conceptualized by Eric, who is the founder of Artblocks, and aesthetically designed by Alexis. This project pairs creative coding with a beautiful spectrum of embroidery floss colors. The project is a token of our appreciation.
Hey guys, welcome into the metaverse on Cryptotvplus. In today's video, we're going to be taking a portal into the Nakaverse and explore it a bit. The name Nakamoto will never be erased from the history of tech revolution on Earth, which brings me to the metaverse project we'll be talking about today, Nakamoto Games. Nakamoto Games is a play-to-earn gaming platform offering different gaming experiences for gamers as well as developers. It's more or less like a metaverse that will allow gamers to have access to lots and lots of games on the platform, while developers
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Cryptotvplus.
Hello, my name is Chiki and I'm the boy of the bullet.
Keep watching Crypto TV Plus.
Don't touch that die. Peace.
Welcome back, everyone, tuning in from around the world. I am Faith Aquaria, and this is Inside Blockchain. I still have joining us virtually Davison Otu, who has, given us elaborate and very concise answers to most of the questions that are bugging most of you guys out there and us here, right here in, the studio. So to move on to the future, where do we see the future between the synergy of the blockchain space, crypto trading, and the government when it comes to the legality and regulation process in Nigeria and in Africa? Let's get this answer to wrap today's episode up.
Okay, thank you, Faith. So I would say that one thing that would increasingly become apparent to everyone is that crypto is here to stay. and crypto adoption will keep rising. There may be issues around its volatility, but if you look at Africa, and I'm not going to mention Nigeria, but the argument will still be made that it is arguably a better store of value, right, than a lot of local currencies you see in Africa, which seems to always be depreciating. There are always devaluations, whether they are deliberate or not, but you tend to see a lot of devaluations. At least with crypto, you can hope for a rise in demand and value so you can sell to make a profit, even though the last few months/years haven't been so great. But there's that belief that there will be the rise again. Now, bearing this in mind, the authorities are likely to adjust their stance, if not for anything, in order to tax crypto transactions to make up for the shortfall in commodity revenues. I mean, look at Nigeria, for instance. Central Bank of Nigeria similarly banned, crypto to an extent, but what you then even saw was a rise in crypto trading. So governments will need to take that into consideration and find a way to probably tax, these transactions, and if they cannot, and if you've banned something, then you can't be trying to tax it, right? So most of these bans and restrictions, we'll gradually see them being lifted, because if money is being made in that sector, it doesn't make sense trying to ban it. And again, a central bank of Nigeria, for instance, cannot ban cryptocurrency because in the first place they cannot regulate it. So why doesn't the government just find a way around that? And I think we're going to see more of that. I think another question that is sort of like a bigger question there is, how will the regulations be structured? Are you going to have heavy-handed, regulations? Will they have an extractive approach? Will they balance the need for innovation with consumer protection? And I would say, to achieve friendly regulations, which we've discussed so far, the level of engagement in the crypto space with prospective regulators has to be increased. So in Nigeria now, we have the Central Bank of Nigeria, the SEC, and then we're probably going to have the Federal Inland Revenue Service, FIRS, if the Finance Bill 2022 is passed into law January next year. So I will say, stakeholders in the space, they need to work with these regulators so that you can help them gain insight, and provide guidance on how they are working, comply as much as possible with anti-money laundering and counter-finance terrorism regulations and requirements, and let corporate governance be increased. Let there be a level of transparency around operations so that trust can also grow within the ecosystem.
Thank you so much for joining in. We had an amazing time with you talking about the legal and the regulatory framework when it comes to trading cryptocurrencies and the building innovations on the blockchain, which was quite a very educative moment for us. Thank you so much for joining in, Davidson.
Thank you, Faith, for having me.
And that will be all on today's program. You can get more market updates and all the happenings captured within the world of blockchain and cryptocurrency on our website, Cryptotvplus.com. Follow us across all social media platforms at Cryptotvplus to get daily info on our programs. Thank you for staying with us. I am Faith Ekwari. I had Davidson Oturu, who joined virtually to talk about the legal and regulatory framework to trade in cryptocurrencies and building innovations on the blockchain. So when I come your way again, I'll see you next week. Bye, guys.